What's up, amazing forex traders? Welcome once again into my screen. Today I'm going to be breaking down US30, starting from the monthly time frame, as you all know, down to the 4 hours. So let's get the charting started. Now currently we are in the monthly time frame. Now looking from the monthly time frame, you can see the market has been creating series of higher highs, higher lows. Don't mind this little bit of stuff here. So just give me some seconds. Let me take them out. All right, we're back. Now looking at the monthly time from here, what can you all see? Now looking from this place here, you can see that the market has been creating series of higher highs, higher lows. A blind man can see, and you will know that this is an uptrend. So let's go to the weekly time frame. The weekly time frame, you all know what the weekly time frame are. But looking at this daily this monthly time frame, you could see that market came here, we broke out, it retested back, now currently moving to the high parts. Now how many days? 8 days. 8 days remain for this candle to close. Remain 8 days. So let's go to the weekly time frame to make more meaning out of this. Now we are in the weekly time frame. So looking at the weekly time frame, what can you see? The weekly time frame is simply showing the chart more clearer. Now from the weekly time frame, you can see that the market came here, created a double top, retested, came to this place here to retest this key level, spike to the upside, pull back to this point here, and continue its move to the upside. Now looking at this point here, you can see the market has been creating series of low, high, lower low, and higher low, higher high. The market has retested to create this minor, what they call it, pullback. Now this is not the main pullback, this is the main pullback. It came here, those came and retested here a little bit, came here again, retested here, came here, retested here. Now I'm going to take this as an opportunity. You all know here, because market has been creating series of highs, lows. Are you understanding? Now not just that, actually I was expecting this to pull at least down to this point, but I think it's not yet ripe. It's not yet ripe. It's not yet what's the right English for that? If you know the right English, comment it on the comment section. I'll be there to, you understand me. So let's continue what we're here for. Now looking at this, you can see that the market here, the main and objective, the aim and objective of this is to identify and to break down this chart to look for what. Now you can see that this point here is showing that the market is still bullish. Now what are we seeing? More weekly and monthly are in sync. Weekly is bullish, monthly is also bullish. So let's go to the daily time frame. Let's see if the daily time frame also corresponds together with the weekly and daily. Now this is the daily time frame. Now looking at the daily time frame, you can see what we call a Willy zone. Now not just that, let me come to this place here so that I can get my tool. All right, why is the tool not showing? All right, I speak up. It was network actually. You can see we had one touch at this point here. We had a touch, one touch. We had two touch. Please make sure you are counting the amount of confluences we had. Now number one, confluence. Before I start counting the amount of confluence, I just want to break this down so you all can follow me as I continue breaking it down. Now we also have the last touch. So this is what we call a release zone. The market came back to this point here. It broke out from this resistance point, turning it into support, retested back, and as it retested back, it also retests on the what supports trend line. The market pulled back and both is bouncing off the trend line. So this is what we call the release zone. So I will be taking out this point now so that my chart can look more cleaner. All right, now my chart is looking very clean, so I'll be heading to the next step. Now looking at this, now the market broke out, is retesting at this point. Now as it has retested, it also retested on this support level. I can see this resistance that turned to support. I understand it. So now you all know that this market will be incomplete without Fibonacci. So I'm going to be using a Fibonacci zone from Fibonacci, drawing my Fibonacci from the low. Don't mind me, that was a mistake, my bad. All right, so from here, the Fibonacci. Actually, you don't know what Fibonacci is. Fibonacci is a tool, a very important tool. Without Fibonacci, I don't think. Let me not go straight to the point. That based on my strategy, this is the golden ratio. The 0.6, that is the 60 Fibonacci level, and the 50 Fibonacci level. That is the golden ratio. So anything apart from that, I don't use it. Now you can see that the market has intersected. The market intersected on what? Yeah, the support level, Fibonacci, EMA, and also market created a what? A bullish candle. This is a very bullish candle. Are you understanding? So we have how many confluence here? We have the direction of the market, one confluence, that is weekly, monthly, and daily, all pointing to the upside. That is one confluence. The next confluence is what? Pull back to Fibonacci. That is one. That is two confluence. Three confluence is pull back to support. That is another confluence. That is three confluence. Or is it four? Hope you are counting. Then the next one again is pull to the what? To the trend line. That is what? Five or four confluence. I'm not counting it, but I'm just trying to just mention it for you so that you can see what and what are in sync for this market to pull, to bounce to the upside next week. So all right, I'll be taking out all this now from this point here and this one also. Now let me bring out my EMA. Let me see if also my EMA is also pointing at that point, but it does not matter if the market, if the EMA is not intersect, it did not intersect at this point here, it does not matter. Only what I just need one indicator, which is one indicator tool, or just one tool, that is the Fibonacci. If Fibonacci can show me that market has already taught this, I will use it. Because now let me explain something. Fibonacci outrank EMA, don't get me wrong, based on the way I trade. That is how it has been graded. Now if I should see Fibonacci at this point, it gives me more confidence to take this trade. But if I don't see Fibonacci, then I'll go for another alternative, that is EMA. If EMA should intersect at this point here, then I'll be taking the trade once I should see my entry model on a lower time frame. Now don't get me wrong, I'm not entering trade on the daily time frame. I go to the lower time frame. You all know, you can check my previous videos, check all the videos and see how I execute my trade. If you have not seen it, then go and see it, and if you see it, you cannot unsee it. That is it. Now looking at this point here, now I'm going to be on, where's my EMA? All right, see it here. Now I'm going to be, let me try turning it down. Now you can see that the EMA is also at this point here, closer to the tip here. That does not matter. If that the EMA was like this here, like this point here, that held it, I was like, wow, we had additional confluence at this point, but that does not matter. So we're going to be going down to the what? To the 4-hour time frame. You all know the 4-hour time frame is my entry model time frame. That's where I usually come and place my trade. So I'm going to the 4-hour time frame. So let's go. All right, so here we are on the 4-hour time frame. As you can see, this is my 4-hour time frame view. Looking at this at this point here, because this is where we are more interested on. Now look at I supposed to have entered this trade at this point here. No, at this point here, this next point here. But I don't use candlestick to execute my trade. But based on price action on this particular asset, you could see that the market, when market came here, or previous patterns. Let me come to this point here. We are going to be judging the future now based on past data. Now looking at this point here, when market came back to this point here, it created this weak rejection, created this candle, then created this next candle, a little bit of pullback, then voila, an engulfing candle. Now let's go again. Let's see if you can see another. Market has always been doing such a thing at this point. Now looking at this point here, on this point here, you can see the market created this candlestick, created this little one, pullback, voila, an engulfing candle. Now let's go again to the future. Let's go to the future, but actually not still to the future. Now looking at here also, market came here, created this candle. Based on this candle was very high, powerful, but market came here, created this candle here, came back up with this candle and started going back up. Are you seeing? It did the same thing on this point again, also did the same thing, went back up. Now let's jot this now based on this candle. Remember, I said I don't use candlestick to execute, but I'm just trying to educate you all on what has happened in the past, so that I can come here again to use it as a confluence. But the confluence does not matter, does not tell you to execute. But if you feel like you can execute, but I'm not giving you any proof or guarantee. Remember, this is a game of it's a speculative game. It's a speculative business based on what you are attaching it to. If you attach it if you're a gambler, let me not go through too much talk. Now you can see this is exactly the same thing that happened. Now you'll be asking yourself, why is this not on the level? If you go to the weekly time frame, you will realize that yeah, this is on the week. Then if you go to the weekly time frame, you realize that yes, this is on the actual level. But because this is on the daily time frame, I don't want to take any chances, so I had to place it at this point here. Alright, this is where I place it. Okay, on the daily time frame. I didn't place it on the 4-hour time frame, don't get me wrong. I placed it on the daily time frame here. That's why I placed it. Or let me go to the weekly time frame so that you can see it more clearer. Now this is the point I said. If you point it on the weekly time frame, you could see it very well. But that is not where I'm placing it. Or let me just go to the 4-hour time frame so that you can see what I'm saying, so that you won't get me wrong. Now, what did you see on the 4-hour time frame? The market pulled back exactly at that point. Now bouncing off this point. Bouncing off this point. Are you getting me? Some traders has already entered inside. Don't get me wrong, I'm also inside, but I'm using a very smaller lot size. A very smaller lot size with a little bit of risk. Just a little bit of risk. So the market, I'm waiting for my main entry. If the market does not give my main entry, then the market will spike to the upside. It does not matter, but I'm waiting for my main entry. That's the main entry I'm going to be explaining now. So just hold on while I explain it now. Alright, this is not the point. This is not the place. It's the daily time frame. Now the daily time frame, I didn't want to take in any chances, as I said earlier. That's the reason why I placed it on the daily time frame. And you're looking at it from here, because the market can bounce off of this point here at any time. Now looking at the daily time frame, you can see that when market broke out from this point here, it also retested it. And when market broke out from this point here, it also retested it. So this is the place I prefer. This is the place I prefer. Now looking at it now, market has broken off this support zone. So there are likely things that may likely happen. Based on what I'm seeing here, this market is somehow the candlestick is somehow losing momentum. Look at it. When it started here, it had a more powerful. It was very powerful. Came back here, very powerful. When it came here, the candle started to reduce. It's very shrinking. So looking at it, I think the factor that caused that thing here was this point here. If I'm not mistaken, yeah. Can you see? Can you see? That's what happened. The market came here to this point where pull back, because this market reacted and this retest continue. This place retested, came back here, came back here. So what will I be expecting at this point now? What will I be expecting? I'll be expecting for this market to give me an entry model, which is this. Let me take out this. I'm expecting the market to give me an entry model. You all know my entry model. Very easy and very simple. Depend on you. No matter how you look at it, you cannot implement it except I teach you it, because there are tricks to it. So I'll be expecting a pull to this trend line, a retest back to this support zone, then an engulfing. Once I should see an engulfing at this point, then I'll be executing with the engulfing candle, rough estimation, long position at this point here. That's why I'll be taking my trade at this point here. Then my stop loss will likely be at this point here. Then my take profits will be on the daily time frame. So this may be likely going to be a 1 to 3 risk to reward. Very simple and short. Very simple. Looking at it here, very simple and short. This trade worth it. The monthly time frame, the weekly time frame, the daily time frame, all indicators are pointing to the upside. So what is left is for me to be very patient, or is left for what's left is for us to be very patient in order to take this trade. This market may likely continue rallying to the upside. Only God that knows, depending on the candlestick that printed out. But the main take profit is this point. The main take profit is the daily time frame. All right, I'm coming. Let me go to the daily time frame. The daily time frame. The daily time frame. There's a daily time frame here. All right, I know you can hear some noise around. The rain is falling actually, and they will all do their thing. So this way we'll be expecting our take profit to be. This way we'll be expecting our take profit to be. So that's our first take profit. Our first take profit. So if market should read that side, if you feel like holding, you can hold. If you feel like not holding, you should take all your position at this point here. When I'm looking at this thing here, I don't believe if this thing will keep rallying to the upside based on the monthly time frame candlesticks. So what I'll be expecting is to take my profit at this point. But I have main take profits, two take profit, one on the weekly time frame and also one on the daily time frame. The main take profit is the last take profit actually for now is is this one. That is 54,430.4. You understand? Then another one on the weekly time frame. Don't take this for chance. Don't take chances of, like, don't use this and play. Market may likely come back to this point here and reverse. Believe you me, I'm telling you, you heard this from me. Market may likely come to this point and reverse. This has happened to me several times in several occasions, many times. That is the reason why I don't use this to play. Market may just come to the tip of this point here and reverse. So do not use this to play. If market should come to this point here, that we're going to be giving this place as TP1 and TP2, but I'm not going to be making this place look very awkward because I don't like messing my chart. I like making my chart at least to be less complicated, because if your chart is very complicated, it depends, you may likely make some little bit of mistakes. Yeah, so that is going to be our first take profit. So I'm going to be going to the 4-hour time frame now to correct this. All right, did you see what just happened just right now? Do you see what happened right now? So I'll be adjusting this. I'll be bringing down the line a little bit to this point. Yeah, so that's going to be it. So I'll be leaving this. I'll be taking out this long tool, and I'll also be taking out this stuff out of here. Then I'll leave that at that point. So if my swing market, if I should see that point there, or I can also do another thing like this. At this point here, I can also put this here. Then I can put a pending a clock at that point there, or I can just leave it like that. As you can see, this is making the chart looking more cleaner, very clean. Or I also can come to this point here and make this all right, visibility only at this point here. Then I also come to this point here also and do the same thing to it. And I'll say visibility only, and this one too, visibility only. Are you getting it? So that is just it to this. So this is going to be the trade I'm going to be expecting next week. Once next week should open, I'll be expecting this setup to form. If the setup does not form, if the entry does not form, then my trade will be going to the upside. That means market may likely spike to the upside. But if it does not go, this is just 80% market is going to head to the upside based on all the indicators basically up. But we cannot just neglect or ignore the 20% that is left. So the 20% that is left is that if market should create something like this at this point here, a breakout from here with one or two candle breaking out of here, out of these points, I'll be drawing a little bit of a demand zone, or anything you want to call it at that point there, but I'll be drawing a little bit of a line there, just a box there. All right, at this point here, you first saw this from this channel. Believe you me, believe it will catch. So if the market should break this with 1 or 2 candles, bearish candles, I just need 1 or 2 candles from that point. If market should break that side from that place, then we are going to be heading to this point here. Nice. If this should happen, our stop loss is going to be here, or we are going to be carrying it to this point here. Our next take profit is going to be this 1 to 2 risks to reward. That's just what it's going to be, and it's going to be a day trade, not a swing trade, because 1 to 2, how many days will it take? Just very fast. So this is just only these 2 scenarios that may likely happen. If market does not head to the upside and trying and give us a clue, that is the first hand is giving us a clue that it wants to start moving to the downside, we will catch it to the downside. But what are we going to be doing? We're not going to be following the top down analysis any longer. We're going to be neglecting it, because the top down analysis, everything is all the indicators are pointing to the upside. So we are going to be counter trading the trade. Does that make sense? That's if this should happen. We're going to be counter trading the trade. But if this should not happen, if this does not happen, then we are left with this option, waiting for the market to come to this trend line, retest back to this point, then one candle. I pray that the candle does not look something like this, because if the candle should look very big like this, then it has already gone halfway to the market, because the market may likely just immediately pull back at this point here. If I should see some weak rejections, I may likely jump the trade at this point here. If I should see a weak rejection, something like 1 or 2 candles, like 2 candles at this point here, or maybe a bullish bullish candle like this one here, I may likely jump on it. You understand? I may not wait for this point here, but the accurate way is to wait for candle to break out of this. Yeah, so that's just it. So I'm just praying that the candle that may likely print out from here does not look bullish, because if the market should look bullish, it has already gone half of the way of this, and I may likely not catch the trade. So let's see how this plays, and let's see how it plays. If you're interested in taking the trade, please make sure you apply risk management, because forex, you all know that forex is all about the game of speculation. But I'm very certain on this trade. As I broke it down, you all know that yes, everything, all the indicators are pointing to the what? To the upside. To the what? To the upside. So let's wait for the market to open. That is next week. Today is Saturday, as you can see. Wait, let me point it up so you all can see. Yesterday was what? Yesterday was 26th. Today is gonna be what? Today is gonna be August, blah blah blah, blasey blasa. So that is just it to it. So let's wait for the markets to open, and we are going to be moving down to the upside. Have a nice day, and I wish you all a blessed next week. Profitability, blasey blasa. Have a nice day.